When I first started trading back in the early 2010s, the word automation already had this kind of futuristic glow. It meant efficiency, precision, taking emotion out of the equation. But even then, automation was still rule-based. You told the system what to do, and it did exactly that, no questions asked, no learning, no adapting. Fast forward to today, and we're standing at the edge of a completely different frontier, one where artificial intelligence is not just following instructions, but learning from the markets as they move. Welcome to The Disciplined Trader, brought to you by bellsforex.com AudioWorks, where strategy meets self-mastery in trading. In this episode, we'll explore how AI is transforming automated trading systems and how you can integrate it into your own trading approach, not as a magic bullet, but as a powerful enhancement to your strategy, discipline, and decision-making process. So let's get straight into it. AI has become the backbone of innovation across industries, from healthcare to logistics, from advertising to finance. But in trading, its role is particularly fascinating. It gives traders a way to process massive datasets, news sentiment, price movements, macro indicators, even tweets, and translate that chaos into something structured, something actionable. Traditional algorithmic trading systems work on predefined logic. If A happens, then do B. They rely heavily on indicators, moving averages, oscillators, things that can be programmed. But AI-driven systems? They think differently. They adapt, they evolve, they learn. Machine learning models, for example, are constantly fed with historical data to identify patterns that repeat. Natural language processing models scan the world's financial news, social media posts, and reports to gauge market sentiment. And then there's reinforcement learning, where the algorithm learns by doing, by trial and error, improving with every cycle. As traders, we all know that edge doesn't come from being right once. It comes from being consistently adaptive. And AI, when properly integrated, gives your trading system that edge. Let's break this down in a way that's relatable. Imagine you have a system that trades breakouts based purely on price patterns. Let's say it buys when a stock breaks above resistance with high volume. That works well in steady markets. But when volatility spikes or sentiment shifts suddenly, say, because of an unexpected news event, your system doesn't know how to interpret that context. It just sees numbers. But an AI-powered system? That's different. It could be scanning headlines, reading central bank statements, or analyzing the tone of social media chatter, and recognizing, before the chart even moves, that the sentiment is turning risk off. So instead of buying that breakout, it might reduce position size, or hold back entirely. That's not emotion, that's data-driven intuition. As Paul Tudor Jones once said, the secret to being successful from a trading perspective is to have an indefatigable and undying and unquenchable thirst for information and knowledge. And that's exactly what AI brings to the table, an endless thirst for data. Now, let me bring this to life with a real-world example, a case study based on a fund I'll call Quantum Investments. Quantum Investments had been using an automated stock trading system for several years. It was built on technical indicators, moving averages, RSI, volume spikes, and for a while, it worked fine. But when volatility hit, the system began to falter. The market would whip back and forth, generating false signals, and the fund would take a series of small but consistent losses. So, they decided to take a bold step, integrating AI. By gathering data beyond just prices, sentiment from financial news, social media chatter, even central bank commentary. They trained a machine learning model to recognize how sentiment correlated with price behavior. And then they added a layer of natural language processing, allowing the system to actually understand the emotional tone of what was being said about the markets. The results? Within 6 months, Quantum Investments saw a 20% increase in profitability and a 15% drop in overall portfolio risk. Why? Because the system wasn't blindsided anymore. When sentiment turned bearish before a downturn, it reduced exposure. When optimism surged after a positive policy shift, it caught the move early. But, and this is critical, AI didn't replace their trading strategy. It enhanced it. The human traders were still there, validating, interpreting, refining. The machine gave insights, but it was still the human judgment that turned those insights into execution. That's something I've seen in my own trading too. When I began experimenting with AI-driven models, one of the biggest lessons was this: AI is not about predicting the future. It's about increasing your probability of being prepared. It helps you manage uncertainty, not eliminate it. AI also brings discipline, but only if you let it. Because once your system is data-driven, there's no more room for gut feelings or impulsive trades. It forces you to trust the process, to stick to parameters, and to continuously validate your assumptions. And yes, it comes with challenges. Integrating AI is not plug-and-play. It requires high-quality data, good pre-processing, and constant monitoring to avoid overfitting, where your model becomes too good at understanding the past and terrible at predicting the future. But with the right approach, the benefits far outweigh the complexity. When I look at the evolution of trading, I think of what Jesse Livermore once said: "The game doesn't change and neither does human nature." And he was right. The tools evolve, from ticker tapes to terminals, from algorithms to AI, but the essence of trading remains the same. It's still a game of psychology, discipline, and risk. The difference is, today, AI gives you the ability to quantify what was once intuition. So, if you're thinking about integrating AI into your trading system, start small. Use it to complement your existing strategy, not replace it. Feed it clean data. Test it thoroughly. Monitor it closely. And always remember, it's not about building the smartest machine, it's about building a smarter trader. Before we wrap up, I'd like to leave you with a question, and I genuinely want to hear your thoughts in the comments below. If you could use AI to improve just one part of your trading, would it be strategy development, risk management, or emotional control? Let's open that discussion, because how we use this technology, thoughtfully, strategically, and ethically, will shape the next generation of traders. That's all for today. See you on Monday. Thank you for listening to The Disciplined Trader, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!